Hi, thanks for joining me again. I had a request earlier in the week to speak about testing the market for supply, or testing in general. I'll run through this chart quickly so you can have a visual look at what testing looks like. Then I've made some notes which we'll run through and discuss, and then show a couple of examples at the end. Now this chart, you can see some buying came in here. Price had been trading roughly sideways, and you can see that the volume down here has increased considerably, but spread remained relatively narrow, and in response the next bar closed higher. This was likely some buying came in, and it continued over these 4 bars. And then in response, the market needed to know whether there was still a lot of supply present in the market. So it went through a little testing period. You can see the next bar closed lower with a very narrow spread. That's this bar here. And then continued to do so for 2 more bars. And you can see although volume is rising, it's still average or below, and well below the levels of the initial buying bar and this secondary buying bar here. And so in response, price has broken out. It's moved higher for 4 bars, and then it's gone through a little period of testing again. This is the market testing for supply to see if selling pressure is present. Markets move in the path of the least resistance, and if there's lots of selling pressure present in the market, it'll be very difficult to move price higher. And in response, price would then come back and try to remove that supply, that selling pressure. So you can see here that price has tested twice, an initial test, and you can look down the bottom here, and volume was a little above average. So there was then a secondary test, and volume was confirmed to be low. And so in response, price continued higher again. And then there was a little test, volume was found to be low, a response higher, another test, volume, while still average, it was lower than the previous bar with the wider spread. So price continued higher in response. I wouldn't have been surprised if there was a secondary test here, but the market does what the market does. There was another test after moving higher in response. Volume was low and price continued higher again. Now this bar here, it's an up bar with a narrow spread and very high volume. This was supply coming in. This was selling pressure. For whatever reason, the market began selling here. You can see that it pulled back to a certain price, roughly level with the low of this test, and tried to consolidate, and price then broke down in response. Okay, we can clear all that off. Now I wrote some notes on testing, which we can just run through, and I'll do some illustrations along the way if I can, and we'll see if that helps clarify testing. The principle of testing the market for supply. Generally, price will find it difficult to gain much ground when excessive supply begins to be drawn out of a market. So in response, the market will regularly check to see how much supply is present. This checking process is sometimes called testing the market for supply, or just testing. When testing occurs, price will pull back briefly to challenge any weak holders or those who may be inclined to sell to come out and do so. In doing this, the price action is testing the market for supply. Price is coming back a little to test the market in an effort to discover how many sellers are present at that point in time. This can happen organically or be engineered by professionals. A successful test gives the market, and in particular professionals, confidence that there is not excessive supply or selling present which needs to be absorbed. When successful, this opens a clear path for price to move higher, as the market will almost always take the path of least resistance. Testing can occur at any time in the market. However, tests always work best and are at their most powerful and consistent with strength or buying in the recent background, soon after a price breakout of a trading range or accumulation zone, or when price has an established positive influence in place, which is an uptrend with a buy the dips sentiment. Tests are roughly neutral in a market which is trading sideways in a range or in a potential accumulation zone. That means while they may work, they don't have very much power or vigor. They will just perhaps respond positively for a bar or two and therefore be called successful, but they're in a sideways trading range or accumulation zone and they're not really going to be very powerful. Tests work worst or are least powerful and consistent with serious supply event in the background. It's a selling event or climactic action. Soon after a price breakdown, or when price has an established negative influence in place, which is a downtrend with a sell the rallies sentiment in the market. A test bar can also be used to help confirm previous bars that indicate serious buying or support. So for instance, if you have a down bar where the market has travelled lower and you've got a down bar on relatively high volume that suggests to you that there may have been buying coming in, and then what the market may do in response is test, which is a down bar with a narrower spread and lower volume. And if that test proved to be successful, price may then move away in response. A test bar can also be used to help confirm a breakout, an up bar or uptrend. So if you've got price trading in a range, and then price breaks out, you may find, here's the breakout bar, you may find price then tests in response before attempting to move higher. Or an up bar or uptrend. So in this case, an uptrend, and then you get a bar which looks a bit suspicious, maybe like an upthrust, particularly one that doesn't have really high volume, but is high enough to cause you some concern. You'll often see the market maybe pull back for a bar and then test. And then you may even find a secondary test. And once supply is proven to be low and that this bar is not a serious problem, then the market may respond higher. And you'll find that this was actually an absorption bar, and it wasn't necessarily a supply bar, which it may have looked like initially. The textbook perfect description of a test bar is a narrow spread down bar closing mid to high on low volume. And this is almost exactly what you'll see in the market in an uptrend. You'll see the market's been moving higher, it then tests, volume is found to be low, or selling pressure in the market is found to be low, and then in response, soon after, not always immediately, but soon after, price will move higher in response, which will then prove that test to be successful. A test bar will initially trade lower from the open in an effort to challenge any potential sellers in the market to lose confidence and sell. If the selling pressure is, however, found to be low, the spread or range of the bar will be quite narrow, and the price will often float back up and close off the lows because of this reduced selling pressure or volume, and eventually close mid to high in the bar's range. In this case, the narrow spread is an illustration of the reduced volatility and activity in the market, and the lower volume shows that selling pressure is low. In a perfect world, this sets the stage for the next bar to close higher, particularly if trading conditions remain favourable. In the real world, tests may not always be perfect. For instance, you may get a bar which sweeps lower in the fashion of a test and draws out very little supply or selling, but eventually closes a little higher, remembering a test bar should generally close as a down bar, that is, down close to close, lower than the previous close. In this case, so long as the majority of the bar traded as a down bar, the spread or range is relatively narrow and the volume is low. In this case, the price action is still quite acceptable as a potential test. What's happened in this case is the test may be clearly seen in a slightly shorter time frame, and the higher close is illustrating an underlying strength in the market and perhaps some over-exuberant buying in response to the lack of supply. At other times, the close may be low on the bar and not mid to high, which is what you would find in a textbook perfect test bar. In this case, so long as the spread or range is relatively narrow and the volume is lower than recent volumes, this is thought of as a no supply test and is also considered an acceptable form of potential testing. Also note that a test bar is a potential test when it first prints, and it is only considered a successful test when price eventually trades higher in response. This positive response will often be the very next bar, but sometimes a secondary test may form, especially if trading conditions are not favourable at the time, for whatever reason. It is not uncommon for an initial test bar to have perhaps a wider spread that is considered ideal, or sometimes the volume is not particularly low, and instead of moving higher on the very next day, price may attempt to test for a second time. A secondary test is also quite acceptable, especially so if the spread is even narrower than the first bar and or the volume drawn out is even lower. A successful test is considered a sign of strength for the near future. Tests can and do fail, and a failed attempt to test is treated by the market as a sign of weakness in itself. This is especially so when price is in a downtrend or with weakness in the immediate background. Weakness is selling. A failed test is usually in a market which continues to draw out excessive supply, which forces price to pull back even deeper in an attempt to flush out and challenge the sellers, which is an attempt in itself to remove them from the market. In an uptrending market, you generally see expanding spread and volume on up bars and contracting spread and volume on down bars. And obviously you see the mirror image opposite in a downtrending market, that is expanding spread and volume on down bars and contracting spread and volume on up bars. And what that means is that the market is finding it easier to move in one direction when price and volume are expanding, and more difficult to move in the other direction when price and volume are contracting. So if price has moved higher for a number of bars and spread and volume has continued to expand, it can begin to look a bit excessive and perhaps cause some concern. So in response, the shallow pullback on reduced volume that often follows is usually some form of the market testing for supply. And in some respects, this testing action is a way for the market to reset back to more normal or average levels of spread and volume before price and volume begins to expand again as price continues to climb higher during a markup phase. Personally, I feel that some forms of price analysis get a bit too hung up on naming all the various types of price action. Below are the VSA indicators for strength or weakness. VSA is volume spread analysis, which is a subset of Wyckoff analysis. They have 11 different types of tests, 12 if you include a shakeout. And a shakeout is really just an extreme or violent form of testing. In the end, these are all slightly different variations or degrees of the same thing, which is just testing the market for excessive supply or selling pressure. I find all these names a bit unnecessary and feel they just add to the difficulty of learning all the different market principles and putting them into context. This can serve to confuse beginners. Now, below is a list of all the different VSA indicators. You can see all the different types of tests at the bottom right, shown as confirming or secondary indicators of potential strength. So really what you've got here on this side of the chart are the signs of weakness going down here. And on this side of the chart are the signs of strength or potential strength. And you've got an indicator of maximum strength, bag holding. You've got all the climactic action type bars. And then you've got the demand bars, so stopping volume, potential stopping volume. And down the bottom here, we have all the confirmation indicators, which, when you're looking at signs of strength, are the testing bars. Now, the first one is the shakeout, which is a violent form of test. It'll often won't be a narrow spread, it'll have a long tail, and it's the market ramming itself down to catch stops and threaten that the market's about to break down, to encourage anyone who's in the market looking to sell and get out or be taken out. And a test or shakeout or basic test are like mini versions of a shakeout. So these three are really forms of shakeout. General normal shakeout and two forms of a mini or smaller shakeout, which will have slightly longer tails or wider spreads than a generally accepted test. Then you've got the two normal test bars, a test and a simple test. Then you have the test bars which are in a certain situation, test after shakeout, test after upthrust, test of a breakout, test in a rising market, test of supply after a shakeout. And I used to know someone who had a little saying, and they would say test and a shakeout equals a breakout. You'll often see it, especially in futures market. There'll be a little shakeout and then a test and then a breakout above those two levels. And then you have the no supply bars, the no supply test and a no supply bar. Now, these are really just all variations and degrees of the same thing. They're all testing the market for supply in one respect or another, albeit the shakeout itself is a pretty violent form. Okay, some quick examples. Firstly, this chart is in a downtrend. You can see there's been some supply coming in here, and here's your first attempt at a test, and you've got one bar up in response. Now you can note that this didn't close as a down bar, it closed as an up bar, and it was an attempt to test, but it obviously failed. It was up for one bar, and that bar closed well off its highs, and then enough supply came in and price continued to move lower. You can see here is a good example of a no supply bar, a no supply test. You can see down here that volume was very low, and you got a brief response where price attempted to consolidate and find some support, but price broke down again. There's too much supply in this market. Here, once again, is a little narrow spread down bar. In fact, you have two of them. The first one never even saw any up response at all. And then the second one saw a minor attempt to rise, and then price then moved lower again. Here's another little test bar. Prices attempted to find support. This suggests that there was some buying in the market, because although spread continued to increase, volume was higher and the next bar was up. So there must have been some buying in the market there. There was an attempt to test, and you can see this was probably some form of announcement, I would imagine, because volume was very high, prices traded higher and lower than the previous close. I reckon if you went back, you'd find this was some form of announcement. So you can see here that although the market is attempting to test with the downtrend in place and supply in the background, it's just finding it really difficult to respond higher. Now, I'll switch to the Bitcoin chart. Bitcoin does have quite clear price action. You can see here on this bar here, which initially pushed lower, then closed above mid-bar on really quite high volume. There must have been some attempt to support the market there, and then that was held to be confirmed by this bar, which traded inside the previous bar for the whole period. Volume was almost as high as it was previously, so it didn't go any lower at all. And all you can say from that was there's an attempt to support the market. And that was held to be confirmed by an up bar in response, albeit on low volume. And then you've got a test bar. Now, this test doesn't look particularly low, but compared to the previous volumes up here, it was considerably lower. It was about half. And the market obviously found that favourable because it pushed out and broke out above that level on the next bar. And you can see the price moved up for a little while and then came back. This is more like a little shakeout bar, and it did draw out a little bit of volume, but not much. And you can see that price responded higher, but it wasn't ready to go yet. And then there was a narrow spread down bar on low volume down here. This was your no supply test bar. And in response, price moved higher. So you can see the market continually tests. It pushes higher, it comes back. Here was like another little shakeout, and then a test, and volume was very low. It does this all the time. Here, price is broken out above this level here, and then it's tested. Here's your breakout volume, and there's your test. Prices come back with a narrow spread, low volume, proven that there's not very much selling in the market, and in response, this allows price to move higher. This is how the market works. Here you've got again a breakout. Now this bar has closed poorly, mid-bar or just below. So in response, the market wants to verify whether there's excessive supply in the market. So although it did try to go a little higher here, really it traded lower overall. And you can see down here that volume was quite low. It was average, but it was considerably lower than these two bars, about half. So the market's obviously found that favourable, and it's moved higher in response. And the market does this all the time. You can see here, prices moved up, and there's a consolidation happening right throughout this here. And all these little down bars are the market attempting to test and discover if there's excessive supply in the market. Here's a nice little one at the end. Volume is found to be lower than the previous 3 bars, and price breaks out in response. This is how the market, especially professionals in the market, and there's lots of professionals in the Bitcoin market, this is how the market moves. Finally, here you can see just recently when the market has been looking like it's been quite excessive, price accelerated out. Look at these high volumes, accelerated out of this little sideways range. There was an attempt to test here, and then some absorption bars, which did look a bit ominous, but then look at this little test bar. There was no selling pressure in the market whatsoever, and in response, price gaps up higher over this resistance level, which is a ploy often used by professionals to move markets, gap over a level. Often you'll see that come back and test in response before it accelerates higher. But this market is super hot at the moment, possibly too hot. And in response, it gapped up higher and then continued. And now this bar here would have had some testing in it as well, as would have this bar. This is where we were. This was the test I pointed out. Here was the low volume. You can see price gapped up and then tested, because this bar here really looks like this. you put the full range in. And price is tested, even though it actually has closed higher for the period. And you can see down here that volume was considerably lower than the previous bar. In response, price moved higher on an increase in volume, and then prices tested again and found that volume was lower in response, and that's allowed this bar to move higher, albeit it's closed mid-bar on quite high volume. There's definitely some supply coming into this market. Just what happens exactly, we'll have to wait and see, but it's a little concerning at times, but it's still moving higher, and so you can only watch and trade what you see. Anyway, that's my video on testing. I hope that was worthwhile. The format of reading through those notes, let me know if you think that's worthwhile or a waste of time. Hope you enjoyed it. Thank you. See ya.